Let's go to Simon Bolton from Equalis for some analysis. Simon, great to have you with us on the programme. Again, we're getting to even this news as it's coming in, and just my observation, and it's just borne out now with the confirmation as well. Full-time jobs, 1,800. Part-time, 40,800. We are so close to Christmas. This is a November print, but is this likely a kind of a pre-Christmas reflection on just what's starting to happen as that demand in the real economy is borne out in the figures, i.e. short-term roles for seasonal work?
I would think it is, yeah, Carsten. I think that what's disappointing here is that the number of permanent jobs is a lot lower than we thought. Of
course.
So that's the bit that I think is really going to be the news of today. And this is just showing the slight increase in unemployment through the course of the year. I think we've got to look at the trend again, not just the month-on-month figures. And the trend has been a slow creep up in unemployment. Economists had it predicted to get to 6.5 at the end of the year. So I think on balance, we've probably come out quite well.
They are now starting, though, to ratchet up the peak to justify their RBA easing position, right? The NAB did that this week, calling now for 2 rate cuts, spaced out by the RBA, which is, you can debate that, whether they are prone to do back-to-back easing or tightening. These things tend to come in pairs, is what the smart money would say. NAB says we'll get a separation. That's really immaterial. The fact is they say unemployment will now peak at 6.75%. To your mind, are we looking like that's sort of on trend terms a possibility?
It's a possibility because the trend has been going up. I think that's a big number to get to, however. We still have, I think, got economists saying that this is starting to plateau out now. Some are even calling it a peak at 6.2. So I think my opinion is we're probably nearing the peak, and I don't think that's going to get as high as that 6.75.
Remind people, strip away the jargon, the participation rate today goes higher than expected. But when we get a higher number on participation, we're seeing, therefore, more people out there showing a will to work, not necessarily, though, achieving that goal. And arguably, if you look at, as you said, that imbalance between full...
the part-time,
Exactly.
So that part-time increasing is the participation rate, increasing at the same time.
And therefore, but for that part rate rising, we could have what? We could have even gone worse than this on the unemployment rate, because we would have then been seeing those people registered as not in work, but because they're out working, they don't show up on official unemployment statistics. Is that a valid way of looking at it?
It is. I think that the headline here is we're not creating enough permanent jobs to have people going in to lower these employment figures. And without those, this trend's just going to look set to continue. There are patches of activity, but I think that it's really difficult to paint a firm picture on what the 1 or 2 indicators that really drive
And yet,
this.
if we are making this transition into a services economy, is this typically the hue of the way that the cookie tends to crumble?
It can be, because as that transition happens, people are hiring on a part-time or contract basis to rebalance things. So I think the participation rate is the one to watch, but at the same time, the trend is going the way that everybody expected. It's rising. I just don't think it's perhaps going to see it hit that peak that lots of doomsayers said it was going to.
All right. Let's get a perspective from Simon over to Rick Spooner at CMC Markets Stockbroking. Rick, welcome into the program. What was the mood like on that release? Just give me a feel for it in the dealing room.
Pretty positive, Carsten. I'd say, look, as your previous guest was saying, looking at the overall trend, I think despite the good numbers we've seen in the last 2 months, you'd have to say that the overall picture would still be one of probably gradually rising underemployment, and underemployment and employment growth not quite good enough in the long run to really hold that down. But this is a good number, and that's reflected in what happened in the Aussie dollar. I think certainly this moves the chances of a February rate cut out. It diminishes the chances of a rate cut in my mind. The 2 keys, I think, for Reserve Bank watchers are this number, the labour market, and the Aussie dollar. And so, they're not going to cut rates with these sort of numbers.
That's interesting, though, because you've acknowledged the way the money markets have done is they've put bids into play on the local unit, precisely what the RBA does not want them to do. I mean, if they say in the language was a lower dollar is needed, that is a frustrating development. Okay, it's a welcome development on jobs, but it's almost been cancelled out. But you're saying net that sees them do nought.
Yeah, although I'd give, in the current circumstances, greater weighting to what's going on in the labour market if this trend is confirmed, because after all, the weaker Aussie dollar is only an ends to a means, the means being enough jobs in the economy.
That said, Rick, that said, in fairness, it's worth reminding people, today we have just gone from 6.25% to 6.3%. The unemployment rate has gone up.
Yep.
Okay, now, the money markets might be celebrating that, but in the real economy, that would be a trigger for further easing, would it not? Every time the unemployment rate rises is a catalyst for a cut. It's not taking that reason away.
That's true, but again, you've got to keep on looking at the trend. So we saw the participation rate notch up, so that tends to make the unemployment rate go up because there are more people potentially in the working force and looking for a job. So, holistically, you're absolutely right. If the unemployment rate keeps going up, that's going to be bad news. But looking at today's figures, if we saw this sort of jobs number increase next month or the next month for a third or fourth of these sort of numbers we've seen, I haven't seen the revisions to last month, then we would certainly be in a scenario where the unemployment rate was likely to stay steady. It's a big if, but on balance, I think that jobs growth number is a positive for today.
Okay, Rick, for your contribution, valued as always. Thanking you so much.
Pleasure, Carson.
We'll talk to you later. Rick Spooner from CMC Market Stockbroking. We've got still with me Simon Bolton from Equalis, but we're also going into ANZ's Justin Faber. Just before we do go to Justin, looking at some aggregate hours worked, Simon Bolton from Equalis, falling 4.4 million. So again, that's a difficult one when you've got an underweight build in full-time roles, and therefore you would hope that that's offset by enough cushioning in the part-time space to warrant, kind of people making that switch or signing up to that option. But if their hours are being pared back, it's not synonymous, therefore, with the wealth effect, is it?
No, that's
necessarily being felt.
And also, I think that part-time number of jobs is increasing. So the more part-time jobs there are, the people working those part-time jobs will tend to have less hours. So it's the mechanics of the numbers behind the head figure of 6.3. I think that's where the machinations really are. The trend is what we look at. It's edging up. I think that, as your previous guest there on CMC said, as long as that continues, then we're going to see the rates cuts becoming more likely. Let's
take that argument across to Justin Fabo at ANZ for you now. Justin, welcome to the programme. So the headline unemployment rate rising today, to what level does it need to get to on a headline basis for ANZ to say the RBA should and will ease?
Good morning, Carson. I guess we take a bit of a different view that really, when you look at the numbers, the unemployment rate was pretty much unchanged in the month. So it was just below 6.25 last month, and it's just above this month. So in rounded terms, it's ticked higher, but it hasn't really changed much. So I guess we've got to be clear about that it hasn't changed much this month. The employment numbers were pretty strong, but as you've said, the gloss has gone off that because a lot of it was part-time. But where does the unemployment rate have to get to before the RBA contemplates easing? Well, I think if it starts getting to around that 6.5% level and the trajectory looks like it's going to go higher, then they'd have to seriously think about easing policy further. But we don't see that at the moment.
So they would need to see it hit that level. They would not be preemptive, you're saying. This is not a central bank that's ahead of the curve. It will deliberately wait passively for that number to worsen before it eases. That's your thesis.
Well, that's what we think. I mean, really, you're just looking at one number as well. Clearly, central banks are not mechanical like the markets. They're looking at a range of indicators. The Fed does that. Our central bank does that, right? So they're looking at wages.
They look at wages. They look at national accounts. And again, for one investment bank and for one mainline bank like yourself, the national accounts matter. And for others, they're cast aside as being decidedly dated. Which is it, Justin? Because to build a thesis for easing, you need to grab hold of these moving parts and give them relative weighting, relative significance.
Our view is when you throw a blanket across all of those numbers, whether it be the GDP numbers, the labour market numbers, we know the economy is growing a little bit below trend at the moment. So the unemployment rate, in a backward-looking sense, has been slowly drifting higher. It's been very slow.
Right.
So it's not telling you the economy is disastrous. So rates are low. Do they need to go lower? Our view is at the moment, no. They don't need to go lower because some of that stimulus is still coming through. But it's certainly, I agree with you, it's certainly a watch point. You know, the probabilities around the outlook for rates are certainly that the chance of getting rate cuts is not zero, but we don't see it at more than 50% at this stage.
Justin, thank you. Value it.
Thanks very
Appreciate
much.
all your insights.
Cheers.
Okay, Justin Fabo from ANZ. Again, complicating factor to all of this is the appetite of, in the real economy, employers to take on workers as the dollar weakens off. Those who've got international exposure, in other words, who are looking every single cost input into the business and seeing, you know, pressure coming to bear because their margins are getting crimped.
Yeah.
You know, cost of importing only rising on dollar weakness. Are you seeing any kind of a recognition of that in the demand story at Eqalis, that these pressures start to hit home and that the whole candidate profile maybe starts to alter, in other words, doing more with less?
Yeah.
Where are we at with expectations even on wages?
I think the wages are still set to continue flat at the moment. There doesn't seem to be from our clients any drive to increase those salaries, and those salaries have remained low for a period of time now. So there is this undercurrent of employees that are sort of waiting for the turn in the market, high performers that aren't being able to be rewarded. So into that sort of talent retention strategy that lots of bigger organisations are having to be at the moment. And another lead indicator here is the job advertisements have been increasing month on month. I think we had the biggest increase this month than we've had all year. So the lead indicators are still that seem to support the flattening or even the sort of decline in the unemployment figure. There is an indication that there's going to be more hiring. The adverts are up, appetite's up. So I think that we are hopefully at that peak at 6.3.
As you say, though, it's the composition of the jobs that might be out there that is perhaps of concern, notwithstanding the relatively benign positioning on unemployment, the fact that it's been going up, it hasn't spiked out of all proportion.
That's right, yeah.
Okay, back with Simon Bolden from Eqalis in Just Tech. We will take a short break, though, to the minute, and maybe we thank you there at this point because perhaps our coverage on jobs might well have just come to its end. So thanking you so much, Simon, and season's greetings. Thank you for your contribution for 2014. Value that, and we'll look forward to seeing you to the new year.
Okay, thanks.
Okay.